Imperial was founded by Bill Lynch and has businesses in logistics, car rental, tourism, financial services, vehicle distribution and retail. Imperial operates in South Africa, Africa, Europe and Australia. The company has a market cap of 42 billion rand, a dividend yield of 3% and a price to earnings ratio of 14. Of course, this is the Bill Lynch legacy.
Yes.
Where do we stand with Imperial right now in your book, Ian?
Right now, I think it's been tidied up. I think they've been had split off those areas that are particularly logistics, and I think that it has had 2 years of getting it together, and I think they're going to keep it together, and I would say it's well managed, well aimed. It's one to stay with.
Well, look at this in terms of the share price. Ian, if I can ask you just to step back a little bit there, not right off there. There we go. We're looking at a share price that is performing very well under Hubert Brody's stewardship.
Yes.
Yeah, it continues to go higher. It's reaching for the 200 Rand a share mark. You're right, Hubert Brody's been in the job now for about 2.5 years or so. He was the financial director, accountant. You know, he's done a good job because, as Ian says, he's done a fair amount of portfolio reorganization. They spun off Extra because they felt it was too much capital intensity there. They spun off or sold the air transportation businesses, and they've done quite a lot of acquisitions. The German logistics business. They bought a whole lot of businesses in the sort of vehicle and related area.
So boosting their focal point and divesting from those businesses that perhaps were not core. Is that what we've seen Hubert Brody do?
Yes, I would say so, yes. That's a good sign of well-focused management.
Can it go higher though, Paul? I mean,
well,
if
in
it's
theory,
going
yes.
and making a salt in that 200
I think they're the preeminent player in our market. I mean, the other people that are involved in logistics, we'll talk about Grindrod tonight. Bidvest is involved a little bit in that space. So there are alternatives and there are people that are involved in the services industry, but I think they're the preeminent South African player. The Asian business is substantial, the German and European businesses are substantial. So I think they're poised to either get a lot larger or to do a deal or to become part of someone else's global group. It's certainly in the mix.
But the risk of buying at these levels, I don't want to gloss over that.
Yes, it's high. And of course, I must add to the warning that you've just given, that is, if we look at the global shipping index, cost of shipping index, the Baltic Dry Index, the cost of moving goods by ship over long distances, that's at a rock bottom. It's the lowest it's been for, I don't know, 7 or 8 years. That's just a little bit of a cautionary sign. Does that mean that there's too much shipping? I think it's probably that too much was brought onto the market after the 2002-2007 boom, and it's probably only that. But nevertheless, if it continues to make new lows, we should just keep an eye on that. That means revenues might be harder to obtain on the international markets.
This picture where you see everything panning out in a rosy fashion,
yes.
Surely that still is up for debate because we haven't seen, I mean, Europe is going to impact on us. We're not out of the woods when it comes to the European
Look,
territory.
the nature of markets is that people are always worrying about something. It's just what they're worrying about that changes. But quietly and along the way, what we have seen in recent decades is a sequential expansion of the global economy. And certainly there are countries that go down the drain, but mostly due to bad politics or war or that kind of thing. Absent those factors, there's a steady appreciation, and well-organized companies with good management and sound balance sheets can always expand in that environment. So I think you want to be invested in companies like these. It's only on a PE ratio of about 13 or whatever you were saying there.
So not overly demanding.
The earnings have grown
PE
to support this level
Agreed.
of share price.
Yes, agreed.
Ian, is there anything else you can tell us about Imperial before we move on that we should be cognizant of when making an investment decision with regard to the stock?
Wonderful pedigree under Bill Lynch's stewardship. It got lost. I think they're getting it back. I think that it'll deserve that prime rating very soon.
Hot or not? You want to add something else?
Well, the
Paul?
only thing I don't like that much about it is the vehicle sales business, because that's a very cyclical type of operation. But then again, they've got
vehicle
things
sales
like,
in South Africa have been good.
and they've got like agencies like Kia and so on, which have been very good. So I suppose in the context of a broader group, it's fine. But as I say, I think they could still bring some more action to the market. So I'm happy with the hot on it.
A hot. And
I'll
yourself,
go with it
Ian?
as a hot one as well.